to the Business Breakfast on Dubai Eye 103.8.
Join the conversation.
Where Tom and I are doing a little bit of homework ahead of our day in Sharjah tomorrow. Or rather, we're getting someone else to do our homework for us, plus Shans, because Cavendish Maxwell has conveniently just focused on Sharjah in a new report. Now, we've spoken a lot about the impact of the conflict on hospitality in Dubai and in Ras Al Khaimah. One market we haven't really looked at the hospitality industry is Sharjah. And yet, Cavendish Maxwell's new report says that the conflict interrupted a market there that was already in the middle of some quite significant change. So we are joined by Ali Siddiqui. He's a research manager at Cavendish Maxwell. Ali, it's lovely to see you. Good morning.
Good morning, Brandy. Thank you so much for having me.
When we're talking about hospitality in Sharjah, what are we predominantly talking about? Are we talking about tourists or are we talking about business travellers?
So it's a combination of actually three things. So you have your domestic demand, which is quite significant in Sharjah. At the same time, we have business travels as well as international tours as well. Now, if you look at, let's say, 2025's number for Sharjah Airport specifically, they had roughly around 19.5 million passengers traveling through the Sharjah Airport. And they also have an expansion planned, which is expected to increase the passenger traffic to 25 million. Now, what's important over here is to understand that Sharjah predominantly plays on three fronts. So they have the international travelers, they have business travelers, they have the domestic demand as well.
So what did we see happen to occupancy during the conflict?
So the year started off pretty well, as we had seen in other markets as well. So we saw an occupancy rate of over 80% in January and February. Post that, coming into March, we saw the occupancy came down to roughly around 60%. Now, we also had Eid, so that was able to sustain the occupancy level till a certain extent. Now, when we compare it to the same period last year, the occupancy rates are roughly down by almost 30%.
I was going to say 60% sounds good, but you've got two normal months in there as well.
Exactly.
So for the conflict month, you're saying
the occupancy rate stood at roughly around 60 to 65%, and it was down by almost 20 to 30% compared to the same period last year.
What about rates?
ADRs for some odd reason stood up, so they were up by 1%. So what we can understand by this was that the hoteliers were actually holding on to the ADRs. So rather than reducing it, they were holding on to it in the anticipation of probably the conflict would get over soon.
But I'm looking at those ADRs, 350 odd, 280 odd. They're not high to start with.
Exactly. So when you compare to Dubai, it's almost half of what Dubai has. Or when you compare to Ras Al Khaimah or Abu Dhabi for that matter, it's significantly less. So that's the reason a lot of domestic demand comes in over there. You have travelers from Oman, Saudi also staying over there because the rates are pretty less compared to the other Emirates that we have.
Now, your report says that the conflict disrupted the momentum of a market that was already in the middle of a major shift. What was that shift?
So if you compare to, let's say, 2019, pre-COVID, your occupancy rates at that point of time were roughly around 70%, and your guest numbers were roughly around 1.8 million. Now, post-COVID, occupancies fell down to 50%. Your guest arrivals came down to 1 million. And it took almost Sharjah roughly around 3 years to reach the same occupancy levels that were pre-COVID, which is a good thing. It took Dubai the same amount of time as well. But what's important to know is that the number of hotel keys that are available in Sharjah are significantly less than Dubai. But it's a feat nevertheless, because Sharjah doesn't have a specific anchor as the other Emirates. What I mean by anchor is like international tourist destinations, such as Burj Khalifa in Dubai. We have your theme parks in Abu Dhabi. You have your Qasr Al Watan and so on and so forth. So Sharjah doesn't have that exactly. They have the cultural
They've got a wheel.
They have the Qanat Al Qasbah. They have cultural museum. They had a lot of natural tourism. So they were still able to achieve that occupancy in the same amount of time as Dubai did, is a significant thing. So they had a lot of momentum in the market. The ADR supported that momentum as well as the expansion in terms of passenger traffic. Now, the passenger traffic got improved through connectivity. Now, Air Arabia is the primary hub has a primary hub in Sharjah. They have extended the connectivity. So we have seen the introduction of new destinations such as Vienna, London for that matter. So connectivity improves, you have your international tourism come in, and domestic demand has always been there in the market.
The other big shift here is that the majority of its 100-odd hotels are in the mid-tier sector.
Yes.
But you say that the stock that's being built, the upcoming stock, is higher end.
That is true. The reason for that being is because at the moment, if you see majority of the supply, as you mentioned, is mainly in the mid-segment. Now, there is a potential demand for a higher end hotel keys because the occupancy rate within those hotels are comparatively higher. Now, if you look at, let's say, 5-star or 4-star hotels for that matter, they were able to maintain a higher occupancy than the 1-star, 2-stars and 3-star hotels. So what the hotels are seeing at the moment is that there is demand for it, but there's not enough supply in the market.
30 seconds left with you. Those hotels that are slated to come in, those premium hotels, are they still on track? Are they still going ahead?
Yes, most of these projects are actually on plan. What we've typically seen in the market and in the region specifically is that whatever forecast that people do in terms of supply, there's always a delay. So the materialization rate within the region roughly stands at around 35 to 40%. Though these projects are planned, they will eventually come in, but there might be slight delays.
The last question. We've got Etihad and now Emirates offering that special insurance to people travelling to and through Abu Dhabi and Dubai respectively to boost confidence, to bring tourists back. What do you think will bring Sharjah occupancy back up?
It all depends on how soon international tourism comes back in, because it has an impact, because that's the reason we have seen occupancy levels go down. Now, Etihad and Emirates, as you mentioned earlier as well, that they have introduced the insurance. Now, Air Arabia already has an insurance, but they haven't come out in the market saying that they have made any changes to it. So international tourists basically need confidence to travel to the region, because you have airlines that have stopped activity, as well as countries put in restrictions on traveling within the region. As soon as that gets over, you'll potentially see demand come back into the market, as we had seen during the COVID time as well.
Ali Siddiqui, Research Manager at Cavendish Maxwell, giving us a look at the Sharjah hospitality market before Tom and I go and check it out for ourselves. Thank you for your time.
Thank you so much for having me.